It is true that we do need to broaden the kind of products that we trade in Africa. If you go through most of the African markets generally, we are trading the very basic instruments. Most of them are trading the normal ordinary stocks, shares. Then we have a few of them trading bonds. A few attempts have been made by certain markets like Mauritius, Egypt. When you discount JSE, most of the markets are still dealing with these basic instruments. In order to really make the markets attractive and also to increase the liquidity on the market, we need to look beyond these instruments that we are trading in. So when it comes to Ghana Stock Exchange, for instance, we started talking about what else can we trade apart from these normal stocks and bonds. So we've been thinking about exchange-traded funds. We've been looking at whether we can trade in some derivatives with time, and also other instruments that can make the market a little more attractive. So to answer your question directly, it is true that we need to have some of these instruments in order to broaden the scope and also to make the markets more attractive. And just to add up a little to the original question about opportunities in Africa, in Ghana especially, let me say that the Ghana market is still attractive. It's become one of the investment destinations because when you look at 2010, most of the markets are doing quite well, but when you take Ghana, we've done an index return of about 30% in dollar terms. So it's still making the market quite attractive. What we've done in Ghana is to let technology drive our markets. So we have all our procedures and everything electronic to the extent that the brokers now can use other routing systems where anybody sitting anywhere can place their orders to buy or sell, which will hit the trading engine straight. We do have electronic client settlement system, and we are moving forward to add other features that will make the market more liquid. So we are thinking of borrowing and lending, margin trading, market makers like my colleague from Nigeria talked about. So generally, we are trying to move our markets forward in Africa in order to attract more investments to Africa. So indeed, we need to have more products in order to attract more investment. Liquidity is quite low for most markets in Africa for, to me, two main reasons. When you take Ghana Stock Exchange, for instance, we do have about 35 stocks. About 75% of them are multinationals. And you do have the original owners owning about 50% or more. Then we do have pension funds and other institutional holders holding another 15%. So you realize the public float is very small. And to create the liquidity, you need the public float. So what we are trying to do in Ghana is, one, how do we get the public float to be increased? So we are trying to get most of these companies listed to increase the number of shares that they have and to reduce their holdings in terms of the original ownership so that we can have more public float out there. The other key thing is what Sunil talked about. If you cannot increase the public float, then you need to increase the number of listings. We need to get more listings on our market. I mean, we are 36. Mauritius is about 50. Zambia is just about 20. Kenya is about 50 to 60. Apart from Egypt and JSE, most of the markets have below 100 stocks, with the exception of Nigeria, which is well over 200. So we still have a problem with the number of listings, which also creates the liquidity problem. So in order to improve liquidity, we need to do these two things. One is to increase the number of listings on our markets. Two is to try and get other features into the system that can improve the liquidity, whether to use technology or whether to use market makers who buy and sell for themselves and therefore create the liquidity, or to introduce new instruments that will bring about the liquidity that we need on the market. So these are some of the issues that I believe we should be thinking about in order to solve the liquidity problem.
Doing business in Africa, you can't afford to be without Africa Investor.